Hello and welcome to today's lesson where we're going to be covering the topic Book of Prime Entry. Now, previously we studied that goods can either be sold for cash or on time. Okay? So whenever you sell goods, you know that goods are leaving you, right? And whenever goods are leaving you, credit sales and debit cash because you got money for it. Now, the second thing is on time means that when your customer buys goods from you, but they haven't paid you anything, okay? So this is called baki. Now, sales means goods are leaving you. The customer, he owes you money. So debit customer, okay? Do you see him as human or do you see him as dollar signs? We see him as dollar signs because he still owes us money. That's why he's a good thing and he's debit, all right? So goods can either be sold for cash, that means you pay instantly, you received cash and you gave the goods away. Goods can either be sold on time, where the customer pays you later, but the goods leave you, so credit sales, okay? Now, whenever you say have any transactions, okay? So say, for example, whenever you sell goods, all right? You record it in these Book of Prime Entry. Now, how you have like 13 subjects or different kind of subjects and you have different folders, similarly, you have different types of transactions. So sales journal is whenever you sell goods on time, all right? If you sold the goods for cash, then it has something to do with money, right? Anything to do with money is going to cash book. So, whenever you sell anything on time, you record it in the sales journal. And from the journal, you put it in the ledger, all right? So if you remember this previously, you know that journal entries is debit and credit. And then after that, we have T accounts. So these T accounts are called ledgers, all right? So say, for example, you sold goods on time. So that's where you have debit customer and credit sales, okay? So whenever you have these, each of them should have one T account, all right? One for customer and one for sales. Whenever you sell anything, okay, now I told you that there are three types of ledgers, okay? Look, let's talk about these. So sales ledger is whenever you have customers, all right? So customers, you see over here customer, like they have names. This is a human being, all right? It can be a human being or a company. So whenever you have these human beings and they owe us money, we write it in the sales ledger, okay? So say, for example, we bought goods on time, all right? So if you buy goods on time, all right? Whenever you buy something, debit purchase because we got something, okay? And credit is the supplier because we owe him money. Nobody's going to give anything for free, right? So if this supplier, again, is a human being, okay, or a company, what we do is we record it in the purchase ledger, all right? Now let's talk about this. Say, for example, we have debit cash and credit sales, okay? So anything with sales does not mean sales ledger. Sales ledger is only for customers, okay? So these are human beings, okay? Purchase ledger is for suppliers, all right? And everything else goes to general ledger. So general ledger is where you have your sales, purchase, okay? If you buy anything like a tube light, all right? That's where it goes. Okay, so let's just revise this very quickly. In accounting, we can sell goods for either cash, all right, means we got money instantly, where it's debit cash, credit sales, or we can sell and we can be very nice to our customers. We go like, pay it later. So if they paid later, they owe us money, which is good, but the goods leave us, which is like credit sales, okay? Now, always we record it according to the type of transaction. So the type of transaction is we sold goods on time. So anytime you sell goods on time, okay, it's recorded on sales journal, okay? Sold on time. After we record the journal entries, we transfer them to the appropriate ledgers, okay? So if you sold on time, okay, you have customers, you record the customer's name in the sales ledger, but you record the sales account in the general ledger. What I mean by this is, look at this journal entry. You have two of them, customer and sales. So one T account for customer, one T account for sales. This customer T account will go to sales ledger, and this sales account will go to general ledger. Okay, if none of this makes sense, then you should know that this is the first time you're learning this, so don't be so hard on yourself, and we'll practice this and it'll be a lot better. Alright, so now we're going to be solving the sales daybook, which is a synonym for sales journal. Okay? Now, I told you that sales journal means when you sold goods to your customer and they owe us money. Okay? Alright. Let's go through the question. So reading the question is really important. F. Benjamin of 10 Lower Street, Plymouth, all right, this is the address, is selling the following items at the recommended retail prices as shown. So white tape, £10 per roll, green felt at £4 per meter, blue cotton at £6 per sheet, all right? Black silk at £20 per dress length. Okay, so this guy, he sells different kind of goods at different prices. Nothing so important here. This is the address. Let's go to the transaction here. 2017 May, this is our customer, F. Gray. This is an address, and we sell these kind of different goods, all right? So you also notice that you have something called trade discount, all right? Now, let's talk about this. First of all, you have two types of discount, okay? You have one thing called cash or early discount, and you have a second thing called trade discount. Okay, now let's look at it point of view of a sale. Okay, so on 1st January I visit a shop, all right, and on this day I buy goods on time. Okay, so whenever you buy goods on time, say for example there is debit purchase, okay, credit is supplier. Now alternatively, if you think about it from the business point of view, this would be recorded as a sale. Okay, so credit sales, debit my customer because he owes me money. All right, now on this day, say for example the customer's invoice, all right, so this is like the bill that he got. The bill came at 100, but because of negotiating it, you reduced it to 80. Okay, so whenever you reduce the bill, this is called trade discount. All right, so on the day of the transaction, all right, so this is the day where the transaction happened, if you can reduce the bill, we call that as trade discount. Okay, now say for example the business also provides this condition that if you pay in 1 week, you get 50% additional discount. All right, so why do they do that? Say for example if you have homework assignments, right, you're going to do it on the last day of submission. All right, so similarly business also understand that if you give your customers leniency, so you're being lenient here because you told them pay later, and if you give them this option, they'll pay as late as possible. All right, so what you do is you try to motivate them by saying that if you pay within 1 week, you'll get additional discount, right? So say for example, this customer pays it within 3rd January, okay? Now, if he pays it within 3rd January, how much did he owe us? He owed us 80, all right? So out of the 80, because he got discount, right, how much did the customer pay us? The customer paid us 40 because 80, he paid us within 1 week, so he got extra 50% discount, so he paid us only £40, right? Does he owe us any more? Nope. So credit customer by 80, right? And the balancing figure is discount allowed because we were merciful and we gave him £40 discount. Okay, so let's just revise this. On the day of selling, right, we sold £100 and we negotiated and reduced it to 80, right? So this is a trade discount of say around 20%. Okay, but additionally, if we pay within 1 week, okay, we're very nice to our customers. We say that if you are nice and if you pay quickly, we'll give you 50% additional discount. All right, so that 50% additional discount means that out of 80, right, he will pay us 40. So when he pays us 40, we got the money, so 40 over here. He doesn't owe us anymore, which is credit 80. and debit discount allowed for 40 pounds. Okay, so now let's very quickly solve this exercise over here. I'm going to show you one or two of them, and I'm going to ask you, like, I'm going to show you the final answer in the solved one. So let's see. Day details, okay, pound, okay. One is the working column, and one is the final column over here. So the first question, let's just go through here. F. Gray, 3 Keswick, all right, 3 rolls. So what you do is that first you write the customer's name. The customer's name is F. Keswick. Oh no, F. Gray, my bad. All right, so F. Gray, all right, what's the date over here? 1st May 2017, right? And what did we sell him? So you got to write this down, the selling goods thing. So we sold him white rolls, okay, we sold 3 of them, and each of them cost around let's see here, the price for the white rolls were 10 pounds, okay, so the 10 pounds each, and then we got 30 pounds over here. The second thing we sold him was blue cotton. So blue cotton, 5 of them, for how much did we sell? Around 6 pounds each, right? So another 30 pounds over here. The last thing we sold is a dress, all right? So we sold a dress, black silk. Now the price for the black silk was 20 pounds per dress length, right? So we sold only one, okay, one for only 20 pounds. So the total over here is 20 as well. Okay, now what's my bill? So bill is 30, 30, 20 is 80, okay? Now I told you that 1 is your final bill, and then if you bargain with him, you can reduce it a bit more. So here they said that we bargained and we reduced it for 25% trade discount, okay? So 25% trade discount means that less 25% of 80, okay? So now I think we got a discount of around 20 pounds, right? So whenever we got discount of 20 pounds, anything minus in accounting is brackets. 80 minus 20 is 60. Okay, notice that we have 2 columns. So this is where all your calculations, and to keep it neat, only the final answer in the right side column. Okay, now whenever you sell anything, right? So this is the sales journal. Okay, I told you whenever you sell anything, right? Remember the journal entry is debit F. Gray. How much was the final amount? Just notice, final amount was 60, right? So F. Gray, we sold goods of 60. The goods are leaving us, so sales is 60, okay? So now this is called the journal. This is step 1. After that, we got to record it in the day book, so the ledger, okay? So the ledger would be this way. Ledger would be in the thing over here. So in the sales ledger, remember, the sales ledger is only for your customers, right? So your customer is F. Gray. Now, you know that there is a debit side, there is a credit side, okay? Whenever you sell goods to F. Gray, you sold him. Does he owe me money? Yeah, customers is a good thing, right? So on the debit side, we write sales, and we put the amount as 60, okay? I think that was the final amount. Right, now the second thing is we need another T account, okay, for our sales, okay? So we have another one for sales. So this one is in the general ledger. Remember, sales ledger is only for customers, human beings, and general ledger is for everything else, all right? So in the sales thing, credit because goods are leaving us, right? F. Gray for around 60 over here. So credit and debit, okay? Like that, I'm gonna solve the rest of the worksheet, and then I'm gonna show you the final answer, all right? Take care.